Welcome to the Tax Smart Daily, episode number 14, a daily video series for real estate investors to learn about taxes and stay out of trouble. I'm Brandon Hall, and before we get started, I invite you to join our Facebook community and our newsletter. Links to both of those are in the description of this video. I also invite you to comment anything that resonates with you or any questions that you have. Comment on this YouTube video. I love engaging with our community and would love to engage with you as well, help you drive some clarity with whatever we're saying here. Lastly, mash that subscribe button. I don't want you to miss any sort of future video drops that we might have. This is my seventh take recording this with this guy, but today's topic is gifting property to children versus inheriting that property. So if I were to buy a property for $100,000, and my basis then is $100,000. But then if I depreciate it over time, say $60,000, now my adjusted basis is $40,000. And if I were to then gift it to this guy, like if I were to just transfer title, that's a gift, right? So if I were to take the title and put him on the gift or on the title, then that's a gift to him. That's a gift to him, and he inherits the adjusted basis of $40,000. So what that means for him is that if he were to then turn around and sell it, maybe the fair market value is now $200,000. If he were to turn around and sell it, then he would pay capital gain tax, or he would pay taxes on the total gain of $160,000. His adjusted basis of $40,000. Less the or netted out of that $200,000 fair market value. On the flip side, if I would hold the property until I die and then pass it to him, then he inherits it at his fair market value of $200,000, the current fair market value at the time of death. And then he could turn around and sell it for $200,000 and pay $0 in taxes. So the implications here are that you should just be really, really careful gifting any sort of property to children. We have seen mistakes where people kind of at the end of their life, they'll just start adding their children to all of their assets. And that can very easily be construed as a gift to all of their children. And if you are gifting everything, then they inherit your basis. So we had an instance where an investor was gifted way back in the 80s a stake in an apartment complex that his mom owned. And his mom also gifted all the other children a stake in the apartment complex. So everybody had a 20% stake. Mom passes away in 2018 or 2017, something like that. And all the children are going, cool, let's go sell this property. But they all have zero basis in the property because it's been a rental property since the 80s. It's fully depreciated. And mom had fully gifted the entire value of the asset to the children. So there's zero basis now. And if they sell it for this incredible new value, now they all have to pay an insane amount of tax. So just be really, really careful gifting assets to your children. Understand that they inherit your basis in the asset, and it can impact them whenever they go to sell it at some later point. The best thing to do, at least in today's world, is to pass away with the asset, and then let them inherit that, because then they will receive a stepped up basis equal to the fair market value of the asset. They can turn around and sell it without any tax implications in the vast majority of cases. Now, all of that could change if the Biden tax plan changes how the stepped up basis works. So they are looking at modifying that. And if you want to stay on top of that, you should join our Tax Smart newsletter and our Tax Smart Facebook group. Thanks so much for watching today's video. I hope you enjoyed the little sideshow here as well. Would love for you to follow us on social media, join our various communities. Links to all of those are in the description of this video.